this week's Global Economic Week ahead, all eyes are on the upcoming monetary policy decisions from key central banks and the latest economic data releases. This comes as investors brace for a wave of earnings reports from the magnificent 7 tech giants. And joining us for a look ahead is Jameel Ahmad, Chief Analyst at online trading brokerage GTC. Thank you so much for your time, Jameel. Now, there are US and China officials that have met ahead of an expected meeting between the US and China presidents in South Korea on Thursday. Have we seen a significant cooling down of tensions here?
In one word, yes. And I think we have another example of the bark being worse than the bites when it comes to the narrative that's given from the US president. Because if we had this interview 2 weeks ago today, we would have been speaking about that global market meltdown, the worst crypto sell-off in history and so forth, just based on those random tweets that came out on a Friday about the US administrating another 100% tariffs on China. China's not playing fair and so forth. But if you look at what's happening today, and especially over the weekend, US Treasury Secretary pretty much signaled that it's signed, sealed and delivered now that the US and China are going to reach a trade deal. And there's high hopes that it's going to be actually delivered this week. So it looks like it was just another negotiation tactic from the US administration 2 weeks ago, and that the US and China will actually sign a trade deal, and it might be done by the end of this week.
So does that mean that all the hard work is done and that the meeting between the presidents will just be the last leg of that?
It's a photo opportunity at the end of the day, and you know that the Trump administration won't pass up an opportunity like that to take a photo op, and that's exactly what I expect to be done. It's just going to signal, I wouldn't say it's a victory per se, but it's going to signal like a tick in the direction that, you know, at a time where he is unofficially mentioning a third term, which is unbelievable and unconventional in itself, I think it's just going to signal to his voter base and to the American public that he's doing what he said he's going to do, and that's get a trade deal done. And I think that's exactly what this meeting is going to be this week. It wouldn't surprise me at all if there's no meeting at all, and it's just about shaking hands and signing this trade deal, something that the market's been waiting for now around 9 to 10 months, when you consider that he did come into the office mid-January, and it wasn't long after then that he started threatening those tariffs on Chinese goods.
Okay, all right. Well, let's get into the Fed because that central bank is meeting this week. And of course, they will be giving us the latest interest rate decision on Wednesday. What are the expectations for the actual decision and the tone from Fed officials, and particularly after the release of September's inflation data that came out cooler than expected?
We're expecting another interest rate cut, and the market's fully priced in it's going to be 25 basis points. I would say that we need to watch out for whether anybody else joins Stephen Mirren in voting for a 50 basis point cut. I'm not expecting a 0.5 percentage base cut this week, but it's something that maybe the economy warrants, considering the economic data has fallen off quite a cliff this year, at least on jobs. And if we do have more dissenters join those 50 basis point cut, then I think the market could really move on this. I also would point out that although we're going to hear from Jerome Powell, it's unlikely he's going to give much away at all when it comes to what might happen in December, which would be the final Fed meeting of this year. The reason for that is that we're still now entering the third week of the government shutdown. We do not know when this shutdown is actually going to conclude and what's going to be the aftermath of this. And even when the shutdown does hopefully conclude, the Fed are going to have months of data to catch up on, to check what's really happening with the economy over I'd say the final period of Q3 and heading into Q4. We know Q4 is busy anyway. You've got Thanksgiving coming up in a couple of weeks. Then you've got the Christmas holidays in less than 2 months from now. And I would say that maybe the Fed are going to signal that, yes, we're going to cut interest rates this week, already priced in, but we're not going to give our hands away for what we were going to do in December. And until then, we might even have a new Fed chair be nominated from the Trump administration too. So I think there's going to be too much for investors to think hypothetically might happen in the 2 months ahead. But at least for this week, yes, I do think we have a market risk event.
What other central banks that also have meetings this week include the European Central Bank and the Bank of Japan. And quite interesting with Japan, as they do have a new prime minister in town. What is investors' approach to these ones?
But the ECB, nobody's expecting any change at all because the ECB have been very aggressive and active over the past 18 months or so, to be honest with you. But the Bank of Japan, I would say, actually, that's a meeting we need to watch because you've had criticism come in from the US Treasury Secretary only about 6 weeks ago that the Bank of Japan had been too slow to raise interest rates. And if you would have taken the US-Japan trade issues and general global trade issues out of the equation, the likelihood is very high that the Bank of Japan would have raised interest rates once or twice this year already because the economy was preparing for that at the end of 2024. Don't be surprised if there's no change this week, but I think heading into 2026, the Japanese yen as a currency to watch and as a major currency to watch too. I think that's the most oversold currency in the world. I know you guys in South Africa have been bruised by the South African rand now for close to a decade. But if you look at some of that historic weakness in the Japanese yen, it certainly surpasses what you guys have faced on the ground there.
All right. And just lastly, as we wrap up the conversation, Jameel, because U.S. earnings season is in a full heat this week, we have the majority of the Max 7 companies posting earnings this week. What will you be looking out for there?
Yeah, this week's going to be the biggest economic calendar week when it comes to earnings for this season. You've got up to 45% of the S&P 500 companies reporting their earnings, including, as you mentioned, 5 of the Magnificent 7. So far, if you look at the 25% that have announced their earnings, nearly 90% have surpassed expectations. So corporate America, once again, has not shown any signs of, I would say, dust from trade issues or global economic concerns or any other pessimism that might be over the world economy. Let's see now if the Magnificent 7 can keep up with that train, because as we know, the Magnificent 7 are I would say the major contributors to the global financial markets anyway when it comes to market valuation, and they pretty much set the tone of the pace for whether there's going to be a market sell-off or continuous record highs, which has been the beat of that drum recently. And so I would say let's watch out for the Magnificent 5 this week.
All right, well, we do have to end the conversation there, but thank you so much, as always, for your insights, Jameel. That was Jameel Ahmad, Chief Analyst at online trading brokerage GTC, with a global economic week ahead.